What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. In this video, we're going to be discussing what happened last week and what we could potentially be looking for next week. Unfortunately, in this video, there isn't going to be a whole lot of bullish scenarios being discussed because, well, this was your opportunity to become bullish and it basically failed. Let's go ahead and throw on our moving averages so we can see what's going on. But we do have to cancel out some of these, as the only one that is relevant right now will be the 21 exponential moving average. So you can see that we wanted to get that daily closure above the 21 exponential moving average and then not be a trap. After you get the close above, we wanted to see price trade down, find support, and then rally, as that would have probably been indicative of, higher prices. In fact, what we did was we got a nice spike higher to liquidate the swing high there, tested daily res, and then straight down. This asset is correlated right now with the S&P 500. And if we go over here to the S&P 500, you can see that it had a nasty down day Friday and a pretty nasty down day Thursday as well, cementing the fact that this daily closure here above the 21 was a trap. And then you got lower prices. Now, this was a massive move because a lot of people were stuck. A lot of people were looking at this to be a higher low support and then looking for a new higher high. But the bears had other things to say about that. And now that all those people were trapped, this massive move is just basically them exiting their positions. Now, I don't know if we're going to be looking for immediate continuation of this bearish move or not. So we'll just have to wait until the market opens Sunday night and into Monday and see what this thing is doing. There is an old swing high here that could potentially act as support in the future, but we'll see what happens. But anyways, the reason I even showed you that was simply just to say that's why Bitcoin had a lower move instead of continuing for that bullish breakout, simply because Bitcoin is traded as a risk on asset. So in a bullish scenario, in bullish conditions, Bitcoin will rise. In bearish conditions, Bitcoin will fall. Eventually, I think Bitcoin may end up living up to being that inflation hedge that it was designed for. But as of right now, it just simply isn't, because we do have month over month rising inflation. And instead of Bitcoin going higher, Bitcoin is following the risk markets going lower. In fact, Bitcoin's been in a bear market all year. 2022, you've been red on the year, except for this brief time right here. And that was rejected. So we are continuing to look for more downside. You are into daily support right here. So basically what I'm looking for is I'm looking for this to find resistance and then roll over, break and close below daily support. And then our next area of potential support will be $37,793. This also correlates with a 3-day chart. All right, here we are on the 3-day chart. Remember how I said that correlates with the 3-day support? It does. Right there it is, $37,793. Here is something that is interesting though. Here is 3-day support right now. This current 3-day session is indeed trying to break down. If it closes tomorrow, because tomorrow is the closure for this, if it does indeed close below $40,086, it will look like price is going to be looking for that expansion lower to the next area of potential support. And that, if it does do that and gets down here and takes out these swing lows right here, you will have a new lower low. So not a lot is looking bullish for Bitcoin at this moment in time. I have people asking me if I think that it's going to bounce here, and I don't. I think this was your bullish chance. I think this was your opportunity for a bullish break, and those bears they got right in there real quick and pushed this thing right back down. And right now you are currently trading under support. So we will be looking for a push higher and then potential resistance to be found, and then look for that next 3-day expansion to go down and test this level of support. So that's what we got currently right now. Let's go look at the weekly time frame. All right, here on the weekly time frame, same thing, traded up basically to the weekly 21 exponential moving average, and that's where you reversed. You did take out last week's high and you did take out last week's low. So as long as price was trading above $41,000, it looked like we were going to have a bullish weekly reversal candle, which is known as an engulfing or an outside range reversal candle, but it didn't. It's right back down at the low. Here is the open of the week, and that is currently what Bitcoin is trading around right now. So this is your weekly open. You're right back under it. So yeah, it's not looking great for bullish continuation. Can the weekly open hold, and can we get another expansion to the upside? It's possible. It's just not likely at this point in time, I think. So why did I get short up here? The answer to that is going to be revealed tomorrow on the live stream for the channel member and Patreons. We are going to go in depth into the discussion on why, but really one of the main reasons was we had bearish divergence on a 2-hour time frame. Also, we were into resistance, and I was kind of assuming that we were going to see a bull trap on the SPX, and a few other things. So yeah, went ahead and took that short, and now it's looking pretty good. I'm going to continue to hold this short, but I am looking to add to that position. So we're just going to have to let price chill out over the weekend until the market opens, or we get a new weekly range Sunday night. There's not really anything to talk about on the 2-week time frame. We can go talk about the monthly, if you will. So monthly support is here. That's kind of basically the only thing that's keeping this market up right now is monthly support, as well as the 21 exponential moving average. But this typically has been the end of the bull market once you close a monthly below the 21. But that also typically puts you real close to the bottom of the bear market cycles. So we're probably going to look for an expansion down here, maybe take out the yearly low, the 2021 yearly low, and then we'll see what happens. But there's a gap under 26K on the CME chart, and we'll see what happens there with that. But there is monthly support still standing at $38,491. Here we are on the CME chart. We closed out the week red. We did put in the same signal. We had the low taken out at the beginning of the week, then the highs were taken out of the previous week's candle, which means that as long as price is trading above $42,000, that you had a potential bullish engulfing or an outside weekly range reversal candle. But that thing, the last 2 days, man, were brutal, and it closed back red again. You do have a weekly support setting at about 38K, 38,325 on the CME. If we break and close a weekly below that, then yeah, we're going to be looking for lower prices. There are some of those indicators like your Stokes and things like that are still kind of pegged. We can go ahead and put the stochastic indicator oscillator on here. So the weekly is not pegged to the downside, it's the daily, and it's still kind of pegged. So I mean, yeah, it does look like this wants to bounce and go higher, but at the same time, oversold can remain oversold for a long time. We'll see what happens. A lot of choppiness here at the bottoms. I want you to look at price here, because this is a daily time frame, and this thing was oversold on the daily. And right here, boom, big breakdown, right? Big breakdown. And this oscillator just kept pinging between, oversold and the bottom there, while price just kept going lower. And then you had a good couple, 3-4 days of bullishness, and that automatically pegged it back to overbought, right? And then that's when the real downside move occurred. So that's why we're not getting exceedingly bearish right here, right now. This thing can continue to move lower, but we are looking for that bullish 3-4 day pop to get this indicator back up in the overbought regions. And that will also probably be a fantastic shorting opportunity moving on this asset. And you can use the stochastic for the MACD. All of them are just, they're indicators that lag price, right? They just lag price. But typically what they do is you don't typically want to take a short when the oscillator is bouncing off of the oversold region, right? Simply because as a trader, we look to sell highs and buy low, right? And then if we're bullish, we look to buy low and sell high. So you're typically wanting to take your bullish entries, around here when you have an obvious bullish entry, and then take profits as the oscillator moves into overbought regions. And then if you're getting short, you're typically looking to take those shorts in overbought regions once you have confirmed resistance and yada yada. And so you're just now out of the oversold region on it. So could this bounce? I guess it could, but I am not really looking for that to happen. But it could, right? You are oversold on this. The RSI's got plenty of room to go lower. In fact, the RSI just came in and tested the 50 there, and you're seeing that decline. So there's a lot of things, guys, that we can look at and analyze. Let's go look at the Glassnode real quick. The reason why I'm looking for this to break down is this metric right here. Basically what I'm trying to show you is on this indicator, the lighter edges shows accumulation. So people were buying or accumulating Bitcoin at the all-time highs in a downtrend. And then at the lows right here, 0 means you're not getting any accumulation. See how these lows are not being accumulated? The accumulations are happening at the higher edges. So this shows us that retail is basically buying the highs. So now everybody that accumulated this move up into the fresh yearly high, everybody that accumulated there, they're now underwater. All right. So those people are now underwater. And the last several days, guys, from April, what is this, 11th to where we currently are, there is no accumulation happening. Professional traders and hedge funds, banks, people like that, they do not accumulate highs. They accumulate lows. So if this was a Wyckoff accumulation formation, you would want to see this indicator show you that there is indeed accumulation happening at the lows, because that is what, a Wyckoff accumulation formation suggests, is that there is accumulation at the lows. Now we have gotten, rallies from the lows, which could be suggestive that there is accumulation happening down there, but Glassnode uses real data, and their data showing you that there is no accumulation happening at the lows. So what you have here, more than likely, is a Wyckoff distribution model. So it's not the lows that are being targeted or accumulated. Instead, it's the highs that are being distributed. So, all right, so the professional traders who are selling out of their Bitcoin longs, and as well as professional firms that, do take short positions, are selling the highs. And then you get this massive move lower. So they start taking profits. Closing those positions, and then boom, retail steps up and starts to buy. And then, so the professional funds or the people that have a lot of money, they're just not participating here. So it does look like it's a Wyckoff accumulation formation. It does like there's accumulation happening at the lows, because you're getting these bounces, taking profits, waiting for a next rally in price to sell back into, beat it back down, right? Beat it right back down, then stop, let it get back up there, then beat it down again, stop, let it get up here, liquidate these two swing highs, and enter the real position there. Boom, 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 and down you go. Whereas, bull people see a Wyckoff accumulation formation. I see a distribution formation, and it's simple. And this metric on Glassnode backs that up. This is not accumulation. Accumulation is happening at the highs. That means people are basically providing the liquidity for the downside. Also, one other thing, an oldie but a goodie. All right, so any of you that are new, you might not be privy to this trend line or understand what it symbolizes or represents. The people that have been following me for a while, they know what this is. Basically, what this trend line represents is bullish monetary policy. I don't have this trend line on the chart as a technical guide or a technical indicator to say, okay, when this trend line gets tested, it's bullish. When it doesn't, it's bearish. This trend line represents monetary policy. So the left side of the trend line is when the Fed was uber bullish, making monetary policy attractive for the investor to basically prop up the markets, and they were injecting liquidity themselves. So that was very, very bullish. And then October came, and they said that they were going to completely reverse that monetary policy. So this uber bullish monetary policy that we had during that time, the 2020 drop, then all the way up into, the late 2021, when the inflation was getting out of control, rising inflation month over month, the Fed just has to get in control of that. So now they're going to start rising interest rates and start quantitative tightening. So left side of the trend line, quantitative easing. Right side of the trend line, quantitative tightening. That's why we were looking for this to be the top. That's why we were looking for Bitcoin to pull back, simply because of monetary policy. And you can see that this has been happening. You had one little brief stint of bullish price action in 2022, and it was for like 3 days, and then boom, right back down. So I'm not saying that Bitcoin is just going to be bearish from here on out. I'm not saying that at all. What I am saying is that Bitcoin is a risk market. All right. So Currently still short. We thought we were going to get a bullish pop, but that bullish pop was sold into. CME's closed red on the week. We've seen that already in the beginning of this video. We're going to continue to look for downside continuation. The indicators, only on the daily time frame are pegged, so maybe we get a daily bounce or something, but I think that we can get a nice big, a lot bigger of a drop before we get that bounce to chill those indicators out, to get them back into overbought regions. And, that could be a fantastic short. So hopefully this video helps. I know it's a little bit on the long side, a little bit slow and, dreary, but there's just not anything bullish or, happy to talk about. You guys make sure you trade safe, make sure you trade smart. And as always, happy trading, everybody.